advice for the little guy. We all need advice, and Charles Payne is here to give it. Welcome to the show, Charles.
Welcome. Thank you.
What should the little guy do?
First, let me tell you what I think is driving this, because I've heard you ask a lot of people. It's not just one thing, obviously, right? I give 65% to Jay Powell and the FOMC. Not just from Friday, but from the very beginning. That first rate hike should have been 75 basis points. Growth, everyone's coming to grips. Earnings won't grow as fast as they thought they would. The economy obviously is slowing a lot faster than anyone thought, at least the experts. The carry trade that Steve talked about, 5%. Geopolitical risk, 5%. And the Harris poll numbers, 5%. Particularly if you look at the hardest hit sector here. Dave Bonson mentioned NASDAQ. That's not the hardest hit. Small caps. Look at what's happened to the Russell in the last, let's say, 72 hours, maybe 4 or 5 days since Harris started going up in the polls. They have crashed. That was a hot trade, right? That was where everyone was saying the transition was going to be from big tech to the Russell 2000, the domestic economy under President Trump. That all has gone away. So.
Look, we've still got a sell-off in progress.
Yeah.
I'll show you the fear gauge. It's called the VIX. You know what this is all about. The fear. It briefly topped 60 for the first time since March of 2020, as we were getting into the pandemic. Now it's 39.18, I see. That's the VIX right now. So that's moderated just a little bit, but not much.
The rate of the move is what's important, right? I mean, we've never seen, I think this might be one of the biggest moves in history in terms of just in the last 48 hours. Just mind-boggling. Over 175%, 160% overnight. It was 23 on Friday, 65 at one point this morning. Mind-boggling stuff. You cannot ignore it. You know, if you're an investor, here's the thing I'm telling my subscribers. We were closing a lot of things early last week. Today, there's a couple of stocks that aren't going to come back anytime soon. Come to grips with it, take a loss. You want to build cash because this market is going to be oversold at some point soon, and you want to have the cash to go in there and buy it. You know, a lot of times people come on our network, and we always say, you're buying the dip. In real life, people can't buy every dip, right? So you want to accumulate some cash here, come to grips with what's not going to work, what's not going to come back. You know, because a lot of times in a great bull market, even sloppy stocks can go up, and you can get saved by the market. In this particular case, it's going to be very selective on the way back up, I think.
Suppose the Federal Reserve came in with an emergency rate cut. I don't know, 25, 50, but I don't care what it is, but an emergency rate cut. Well, that's good or bad for Wall Street? I think
initially the market may recoil, but I think ultimately it's good for America, it's good for the economy, and it would be good for the stock market. That's why I brought up the first rate hike. See, the Fed, Jay Powell's so concerned about imaging and looks. Everyone keeps saying, if the Fed does that, everyone would panic. Sometimes you have to panic. Sometimes the theater is on fire. I mean, this whole notion in life, you don't panic. Sometimes in life, you do have to panic. Sometimes you are caught off guard and you have to take action. This too cool for school thing, it's not working. It didn't work in the very beginning when they thought inflation was going to be transitory, and they took a pedestrian stroll toward hiking rates, and it's not working now.
You look like you really want to get into this.
I wonder if maybe Jay Powell moves the goalposts and we abandon the 2% inflation target. Sometimes, seriously, my kids want ice cream before dinner, but the rule is ice cream after dinner. So sometimes
I've been saying that for a long time.
Behavior, you give them ice cream before.
I've always
get rid of the 2%. Get rid of the rule.
To Lauren's point, where did 2% come from? Where did this? Why? Realistically, with all the debt you and Steve just talked about, and the different financial economic conditions that we're in, 2% may be too low anyway. I really believe that the new normal is going to be closer to 3%.
But that would create panic, wouldn't it? If the Fed suddenly raised its okay inflation level, that wouldn't be much stability, would it?
What are you looking at for the last 48 hours? There's always going to be panic, near-term panic. We're talking about long-term stability, and something is wrong. Let's not forget, when the Federal Reserve was created, we were promised no more boom and bust cycles, right? We had 4 panics in the 1800s that were devastating. We had the panic in the early 1900s. They said, that's it. We're going to create this central bank, and we're going to 1913, and we're going to never have panics again. We're never going to have crazy business cycles. That's all we've had since then.
That's true.
Maybe it's a time to make some adjustments. You know what they really should do? Congress should take back the responsibility of full employment that they gave to the Fed in 1977. So our Fed just has one job. And by the way, take away some of the other jobs that we're giving them. They're too powerful. They're too omnipotent. And unfortunately, when they move slow and they make mistakes, we all pay a heavy price.
Today's the day when we have to watch you at 2 p.m. Eastern right here on Fox Business, Making Money with Charles Payne right here.